Welcome to Illuminati Silver. We tell the truth about silver. Today is Saturday the 12th of June 2021 and we're publishing our gold and silver weekly update for the week ending the 11th of June. We also briefly look at political events and economic reports which could shape what happens to the US dollar and therefore precious metal prices. So let's take a look. Now, as support to today's video, we recommend the video we produced on Thursday entitled US CPI Figures Increase Inflation Concerns and Gold and Silver Prices. And we list this video with a link in the description box below. Now, gold fell $14 last week from $1,891 to $1,877. Having hit a high of $1904, so it did breach that $1,900 mark, and a low of $1,870. Ultimately a fall of 0.8%. No consequence in reality. In sterling terms, gold finished the week at £1,330. That's down £5. And in euros, it closed at €1,550. That's down €5. Silver rose 12 cents. From $27.81 to $27.93, having hit a high of $28.30, and therefore again breaching that important $28 level, and a low of $27.49. A rise of 0.4% and reversing exactly last week's losses. In sterling terms, silver closed at £19.80. That's up 17 pence, and in euros it closed at 23.08 euros, that's up 0.22 euros. Obviously, with the fall in gold and the slight rise in silver, the gold to silver ratio therefore fell from 68 to 1 to 67.2 to 1. Now, Bitcoin is up some $1,250 from our report of last week, but on a 7-day rolling basis is $853 higher. It's been as high as $38,334 and as low as $31,081. Looking at equities, the Dow Jones closed on Friday at 34,479. Now that's up 13 points on the day, but is actually down on the week by some 277 points. But the other indices are slightly different. The S&P 500 closed at 4,247. Up 8 points on the day, but up 45 points on the week. And the Nasdaq Composite closed at 14,069, up 49 points on the day, and up 255 points on the week. So broadly, moderately positive for equities last week. Brent crude closed at $72.69, that's up 80 cents. And WTI crude closed at $70.91, that's up $1. and 29 cents on the week. Notice now these are sort of hovering marginally above that $70 level, which, as we reported in a previous week's video, the result of deals struck by OPEC+. The dollar index stands at 90.55. Now that's up 0.42 on the week and firmly establishes it into the 90 category. It'll be interesting to see if it reaches 91. The odds are it actually could do that if the US economy continues to pick up compared with the rest of Europe and the United Kingdom. Now, we concluded last week's video with the following forecast. Quote, so our gold trading range for this coming week is similar to last week, with regular trading for gold between 1850 and 1950, with 1800 and 1995 as outliers, and silver trading between $27 and $28.50, with $26.50 and $29.50 as outliers. Both gold and silver actually fluctuated within our basic trading bands and have closed generally close to the midpoint of those bands, with no real pressure having been placed on the extremities at all during the course of the week. Now, gold did initially dip on Monday, and then by Tuesday actually peaked to its highest. Falling back, that's highest for the week, falling back to its lowest point on Thursday, and then recovering early Friday, and then falling back during the course of the day. In our video on Thursday, we even stated that we thought it was a little surprising that gold and silver should actually go up in price when Janet Yellen stated that she felt higher interest rates would be no bad thing. And the economic data that had been announced up until that time suggested that the level of further additional monetary support may not be required, and this, therefore, resulting in a higher dollar. And as mentioned, we were just slightly surprised to see higher precious metal prices because this would normally suppress prices. But that suppression did come in somewhat on Friday. The rising dollar on Friday certainly hit the gold price, even though the 10-year US Treasury yield actually fell to its lowest level for 4 months. Now, from a technical perspective, we have support at or close to $1,870 and resistance at the 10-day moving average of $1,896, so just below that $1,900 mark, with target resistance at $1,916, and the reason that's targeted resistance is because that's the level, the highest level that gold reached in May. Now, listeners to our channel will be very much aware that we see considerable resistance at the psychologically important level of $1,950, and above that, just shy of $2,000, which is why we've not been advocates of $2,000 gold for the moment, for the simple reason we just feel that the resistance levels currently are too strong, and a major impetus would be required to get gold to surpass that level. Medium-term momentum has turned negative, and the MACD index has suggested a crossover sell signal, while its histogram is printing in the negative, which suggests consolidation. So perhaps further weakness next week, at least so the technicals are suggesting. Good news for US citizens, though, or at least for some of them, is that the net worth of US households climbed to new heights, though most of the gains were stock market related. The first quarter of 2021 showed a 3.8% gain compared with the last quarter of 2020, though household debt grew at 6.5%, the fastest since 2006. Now, we mentioned in Thursday's video that the Consumer Price Index and Core CPI were higher than market expectations, suggesting an annualized inflation rate of 5%, which the Fed and others were quick to suggest that this would likely only be temporary, bearing in mind that their target rate is an annual rate of 2. For those of us with long memories, this rate, if it continues, will be the highest US inflation rate since the 2008 recession. Taking a look at silver last week, we can see that, like gold, it dipped on opening, oscillated during the week, both above and below its opening price, peaking early on Friday and then falling back again, but ultimately remaining in positive territory. $28 certainly does appear to be the level at which it is most comfortable. There is strong support at the $26 level and very strong resistance at the $30 level. Between these strong outliers, we can see resistance at $28.45 and support at $26.92, which is where the 10-day moving average currently lies. Medium-term momentum is positive, with the MACD index generating a crossover buy signal. The MACD histogram also points to higher prices. Now, we've mentioned in previous videos that jobless claims were down from 385,000 to 376,000, that's weekly. And generally, most of the economic news was relatively strong, but fears do exist over increasing inflation. Looking forward to this coming week, we have very crucial data midweek, which we are confident will most certainly move markets. On Monday, it'll remain quiet, there's nothing scheduled, but on Tuesday, we have retail sales, the producer price index, industrial production, capacity utilization, and business inventories all for May. And we also have the NAHB Home Buyers Index for June. Then on Wednesday, we have building permits and housing starts and the import price index all for May. But perhaps more importantly than everything mentioned so far, we have the Federal Reserve announcement on interest rates, or the FOMC announcement on interest rates. And of course, following that, Fed Chair Jerome Powell's press conference. Then on Thursday, we have the traditional weekly jobless claims. And we also have the Philadelphia Fed Manufacturing Index for June and the Index of Leading Economic Indicators for May. Though we suspect that whatever happens with the data on Thursday, it will all be consumed by what's being discussed or announced on Wednesday. There's nothing scheduled, which is not the norm, for Friday. So Tuesday is the big data day, and Wednesday the all-important report from the FOMC Fed, and any changes to interest rates and forward guidance will be closely monitored. Now, we're not expecting a change in interest rates, not in the Fed funds rate. But we could begin to see now a marginal degree of hawkishness coming in, so as to help prevent what we've earlier announced, the 5% annual inflation rate, from getting any larger. But this will be more likely achieved through strengthening the dollar via words rather than necessarily than by actions. Cryptocurrencies this past week have taken quite a hit, dominated by Bitcoin, with the smaller cryptos on a downward trend. On the political front, the G7 leaders met yesterday in Cornwall, England, and are currently meeting today, where US President Joe Biden is to urge Western countries to counter China's growing influence and will call for a new alliance to rival Beijing's spending on infrastructure in developing countries. The UK government have also just announced that what was to be the end of the COVID lockdown in England will be delayed by 1 month amid growing concern over rapidly increasing cases and the higher transmissibility of the new Delta coronavirus variant. We're expecting next week to see more volatility in gold and silver prices, and what is announced on Wednesday in particular will likely have the greatest impact. So, our gold trading range for this coming week remains broadly unchanged, with regular trading for gold between $1,850 and $1,950, with $1,800 and $1,995 as outliers, and silver still trading broadly within $27 to $28.50, with $26.50 and $29.50 as outliers, though we are expecting the outlier territory to be reached this coming week, though it wasn't this past week. Depending on what the Fed says on Wednesday will dictate whether that outlier territory is on the upside or whether it's on the downside. What do you think? Please do share your thoughts. Meanwhile, thank you so much for listening. If you haven't already done so, please subscribe to our channel, not forgetting to press the bell sign so you're notified of our videos as and when they're published. Finally, we wish you a safe, enjoyable weekend and most prosperous week ahead. Disclaimer. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.